If you're comfortable with investing in stocks based out of China, well, this one's looking like it's forming a bottom and heading higher. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Alibaba year to date. This thing's down 33% over the last year, down 52%. You got a $209 billion valuation on this one as it reported earnings this morning. Revenue came in at $29.1 billion. That was just 3% growth year over year. It missed expectations by roughly $500 million. When we start to look out for this company in subsequent quarters, we are still looking at negative revenue growth for the third quarter, expecting revenues to be about $36 billion. That's the holiday shopping season, at least here in the United States. That would be about $7 billion higher than the quarter they just printed. We're still looking at kind of like single-digit growth through the first half of calendar year 2023, and then maybe get kind of in that upper single-digit, maybe even low double-digit growth rate on that revenue side. Now, from a valuation perspective, this one is looking relatively cheap. You've got a 10 times forward price to earnings on this one, and you've got a price to sales multiple on Alibaba that is also very similar to where Amazon trades at. You've also got a pretty extensive buyback as this company is printing very large amounts of positive cash flow. Over the past couple of years, this company has bought back $18 billion worth of the stock. They have about a $25 billion authorization, and they extended that by another $15 billion, and that runs through the end of March of 2025. When you come over here to the financials, you are just seeing relatively mediocre growth across almost all of the business units. In fact, their total commerce division was down about 1%. They have the international commerce business that was up just fractionally 4%. When you factor in inflation too, these numbers are essentially negative. A few of the very localized businesses centered right there in China growing relatively fast. But what stood out for me is their cloud business has basically got the kind of the brake taps by the Chinese government. I think they are really kind of putting the brakes on this business. This grew just 4% year over year to about a $2.9 billion business on a quarterly basis. This well underperforms what we've been seeing here in the United States when it comes to Google, Microsoft, and Amazon in terms of their cloud growth. When you come over here and look at the higher level financials at Alibaba, you have this $29.1 billion worth of revenue. Again, that was 3% growth year over year. Their financials, unfortunately, don't give you kind of a year over year comparison on the United States dollar, but I did see that their sales and marketing expense dropped quite a bit year over year, and their cost of revenue didn't go up. It went up, but not nearly as much as you think in terms of this sales growth. When you flow through all of the expenses, you come down to income from operations. Very impressive, $3.5 billion. You see here, year over year on that Chinese currency basis, up dramatically. But unfortunately, the company had to write down some investments that they've made in the most recent quarter to the tune of 42 billion RMB, or roughly $6 billion. So when you factor that in, you had negative EPS, negative net income on this company. But when you don't factor that in and you just factor in the operating results of Alibaba, actually relatively impressive. Also, equally as impressive is this balance sheet. They have a boatload of cash. In fact, they increased it over the last year. This company has very few liabilities on a company this size. Total liabilities clocking in, we'll call that about $89 billion. They have $95 billion of just current assets and over $240 billion of total assets. This is a very asset-rich company and very few liabilities based on that. When you come here down to a very consolidated view of their cash flows, extraordinary cash flow in the most recent quarter to the tune of $6.6 billion over the last 6 months or 2 quarters. You printed $11.4 billion worth of positive cash flow. That is what's funding those buybacks. And it's also feeding that cash balance at Alibaba as well to the tune of over $4.4 billion worth of cash added to the balance sheet just over the last quarter. This is a very financially healthy company, and the valuation has pulled back to a range where, again, if you're comfortable with that China risk, if you're comfortable with maybe the country will start opening up its economy, a stock like this certainly has some room to benefit. And then from a technical perspective, it's certainly looking like it wants to find a bottom. There was this area down here where the stock has bounced off a couple different times down here at about $60 per share. Last time it did that was actually back in 2015, 2016. There was another area here represented by this green line. We'll call that about $80 per share. We're now just a couple of dollars ahead of that. That's actually a pretty good sign from a technical perspective, if you were to jump in on this one, maybe a new position, maybe an ad, I'd probably have a stop loss somewhere underneath this. We'll call it about $80 range. There's a little gap here. Wouldn't want to see it get below, call it about $74, $75 per share. You get below that, the odds of retesting these lows that you made earlier in this year, probably relatively high. But I tell you what, if the momentum, I mean, we're talking about very, very short-term momentum on this one. If it stays in the name, you have some airspace here, okay? The next real significant area of resistance is likely up here at about $99 per share. That's about $15 higher. If you can blast through that, you're up here at about $120 per share. My only advice on a stock like this is obviously there's that China risk, and there's going to be plenty of investors that are not going to pile into a name like this. And there's a lot of investors that were burned over the hype on this stock and the fact that it's down tremendously. This would be a stock that I would take profits on. This would not be necessarily a stock that I buy and hold forever. And it doesn't mean you have to do that on your entire position. If you buy 10 shares of this at about $85 per share and it goes up to 100 or 110 or maybe even as high as $120, I would just peel off a couple of shares, put some money in your pocket, because obviously you have zero control, and also Alibaba has very little control over the geopolitical risk. And clearly there's some things that could happen there that could wipe an investment out like this pretty much overnight. But the valuation from an earnings perspective, from a sales perspective, from a cash flow generation perspective, this stock is looking actually pretty good at the current time, despite being down 52% over the last year. That was Alibaba. We'll be back again soon with more. Good luck with your investments.